Hello everybody, it's Tortoise Investing coming at you today with my dividend portfolio update. I have made some moves here recently and I was wanting to show you some of the things that happened last month and this month. So it's kind of a September and October dividend portfolio update. Either or. If you're new, please hit that subscribe button, hit the like button. Those two things help me out tremendously. It means more to me than you know. It helps the channel out a lot. Comment down below. Let me know what you've been buying, what you've been watching. I'd really love to hear from yous. But without further ado, let's go ahead and take a look at everything. None of this is financial advice, by the way. Just, do your own research and stuff before buying anything. But here's the portfolio. We're setting $4,386. We are up 12.96% year to date. This is how things are looking now. The S&P 500 year to date is at 8.33%, so we are still outperforming there. It has been a wild ride since the top, down almost 10% with the S&P 500, and the NASDAQ from the top, I know, is down over 10%, 11.17%. So yeah, things are in a downtrend, but no worries, no worries. We are still holding strong. This is how the holdings are looking right now. Right now I am in cash accumulation mode. That's the reason I still got that 100 and a little bit there, and I intend to add more and more to it. And I'm wanting to try and have about $500 just sitting on the sidelines in case things get even worse. I can deploy that cash. But I'm going to be doing a little bit of DCAing while I'm doing that. Probably going to be spending half of what I deposit and then let the other half sit, because I am down in some positions. Extra space storage down 21%, Hershey's down 16%, my SCHD is down 8%, MasterCard, all of these are down. But you know what? I am holding steady. I am a long-term believer in all of these positions. But yeah, this is how everything's looking. And like I said, half what I'm going to deposit is going to go into DCA. The other half's going to go into just sitting there, and we'll try and build up a nice little nest egg. Now, what I've been doing over the last little bit, as you see here, just a little bit of DCA, 4 buys, 25 into everything. I got a dividend from SCHD, went right back into SCHD. Dividend from Texas Roadhouse, right back into Roadhouse. Dividend from Extra Space Storage, went right back into it. Here's another DCA that I did. Just little bits here and there, I'm chopping at it. Another DCA. And here I have a sell. I did buy into United Health at around 470, and it ran up to like 540 something, and I got out of it. When it comes to healthcare sectors, like, the more and more I thought about it, I didn't want to be in those. So I did jump into Pepsi and McDonald's, ultimately just to sell those yesterday. Now I'll take a look at that in just a second. Here's another, just a little bit of a DCA going on. So I did sell those positions, and I bought a bunch of MasterCard, got some Apple, and I've wanted to hold a railroad for a while, and I couldn't make up my mind between Canadian Pacific and Canadian National Railway. So I finally pulled the trigger on it. The big motivator behind this is I really wanted to get a lot more MasterCard, and I wanted to finally open up that railroad position I've been wanting. So when we take a look here, Canadian Pacific, this is one of them I was thinking about. The big thing that deterred me was the debt to EBITDA ratio. If you see here, $21 billion in debt, EBITDA is around $5 billion. That's like that's a 4 times ratio. And I like to keep it around 3. I don't like it to have more than 3 times their EBITDA in debt. So that's the reason I went with Canadian National Railway. Now, if you look here, $16 billion in debt. Their EBITDA last year was about $9 billion. So very much so covered. It's got a little bit higher dividend. And if you take a look at the free cash flow, grown at a rate of 11.41% over the last 10 years, and per share 14% over the last 10 years. So that is growing. They're buying back shares. They got a great return on capital employed. Just a lot of things ticking right for this company. Over the last 10 years, revenue's been growing at a rate of 5.6%. I loved all that. So this is what I ended up grabbing. Now, the thing that really surprised me was yesterday's big drop with MasterCard. If you've seen the earnings, they beat on EPS. They beat on revenue. Everything was a beat. Everything was a check mark. But it dropped. And I was confused. I won't lie. If you see here, dropped about 5.7%. This thing was hovering in the 380s, 390s for a hot minute. And I seen that drop, and I knew I had to have more. I knew I had to have more of this company. There's just so much to love about it. Real low payout ratio. Yeah, the dividend yield's not all that much, but if you look at this, they've been increasing their dividend at a rate of 25.25% over the last 10 years. Mid to high double-digit dividend growth. They're buying back shares 2.5% over the last 10 years. Their debt to cash is just so great. They have $13.75 billion in debt. Their EBITDA is right at that. Revenue's growing at a rate of 11.64% over the last 10 years. Free cash flow, 13.97%. Free cash flow per share is right at 17% over the last 10 years. There's just so many things ticking in the right direction with this company. So when I did make that sale of those, I bought some more Apple at 167, and I ultimately bought in at some more MasterCard at 366. So I dollar cost averaged down with my MasterCard position pretty good there. Like I said, it was in the 396, I believe. I got down to 387. And I intend to buy more of this. If it drops any further, I'm absolutely going to load the boat with MasterCard. I am super duper long term with it. I am a big believer in the future of this company. It's such a wide moat. This and Visa both are just such strong powerhouse companies and great compounders. But yeah, that's a quick look at the portfolio, everything that we've got going on. Hope you enjoyed that little sneak peek. As always, make sure you hit that subscribe button, hit the like button if you haven't already, and I hope everyone has a great weekend. And until next time, see yous.